All right, welcome back. Episode 37, take 2.
The redo.
We had a bit of an issue on first take, so here we are.
I was dubbed in Spanish.
Yeah.
Yo soy investments.
Yo soy investments.
I have no idea what I just said, but hopefully it didn't offend anyone.
Oh man, yeah. So we're back here this afternoon for round 2.
Let's do it again.
Here we go.
I can change all my answers from the first one, so I'm good to go.
you have a second to think about it.
Yeah, exactly.
We had a practice round.
Wow, that guy really didn't know what he was talking about from this morning.
All right, so we are back, but let's go over holiday break. How was it? Everybody have a good time?
It was good. Yes.
Relaxing?
Yeah, it was busy. A lot of parties that
Expensive?
I hosted. Yes, I figured out it's expensive and I will probably not do another hosting for a while now.
Paper plates and
Yeah.
red Solo cups.
I'm actually a little bit
reduce the
jealous
cost
of
it.
your Christmas. That sounds
That I
more
did
my
nothing.
alley. Yes.
That is,
yes.
Yeah, you should be jealous of
Yeah,
my Christmas.
yeah.
It was lovely. It was absolutely whatever I wanted to do
Yeah.
when I wanted to do it and hang out with my family.
Oh,
I
that's
win.
great.
Yeah.
Mhm.
Ours was not as chaotic.
Yeah.
I wouldn't say chaotic. I would say it was fun, but it was a lot. I
Yeah.
mean, just the amount of trucks that our kids got. We had to like redo all of the storage of toys because it's just like.
Did you use the trucks to move said toys?
Our oldest did.
All right.
Yeah.
But
So
the problem is our oldest has like a mental inventory of all of his trucks that he has.
So he knows what he has.
So we
okay.
can't
So
get-
you can't side pocket
No.
ones.
You have to
Ooh,
like set
that's
them
bad.
aside for like months and then he forgets about them. But it's just. a
You should
nightmare.
repaint them and just see if that just
Mhm.
puts his brain into scrambled egg mode.
I doubt it.
I know.
But,
I'm just trying, Tyler. You know,
yeah.
I've been
But
through it.
Yeah, it was good. It was fun. We made it through about 20 minutes of church, so that was kind of a
A
win.
record for you
Yeah,
all.
yeah,
but that's a win with 2 small kids, I guess.
Yeah.
yeah. So
20 seconds above that,
Mm.
you're already
Yeah.
in green territory.
so
you're good.
we initially went out in the back of the church and there was like 15 other kids back there. I was like, all right, I don't feel so bad.
Love it.
All right. So episode 37. I told Jeremy that I wasn't going to nerd out as much just because it's an interesting number. So I have some fun facts instead. So 37
Air quotes.
fun facts.
Air quotes on fun facts here.
China's fun fact.
This is take 2. The first one.
We know what's about to
Yeah.
happen.
so I'll be honest, I love watching shows about aliens and UFOs and I just find it interesting. So 37th parallel north is a latitude that goes across the US and is often referred to as UFO highway.
You know that
So-
you're now my UFO specialist in the team, and you will hear about that going forward.
But it's also the 37th parallel is also known for tectonic activity, meaning earthquakes. So I don't know if there's like something that happens like under the ground and all of a sudden something shows up in the sky. I don't know.
Are you also a conspiracy theory person, just in general?
I don't necessarily believe in conspiracy theories. I love to hear about them.
Got it.
Like I just find it fascinating.
Gotcha.
I don't like truly believe in them, but
Right.
I could go in deep on.
You like the rabbit hole it takes
Yes,
you
I
into.
love like on Twitter or X. I love going down the rabbit hole.
Interesting. Interesting. Oh,
All right.
I'd rather have a dental appointment than do something like that.
I don't know. I just get lost in that stuff. But anyways, so my hot button for today is thoughts on the year ahead.
Okay.
So you guys have already talked about this once. So
Why not say it
maybe
again?
and I did save your answers.
Mhm.
So we'll see if you have the
I
same
already
answer.
reserved the right to change my mind from this morning.
All right. So we'll start with the economy. So first question is thoughts on inflation. Will we end the year below or above 2.5% on headline CPI?
Yeah, I say yes, we will, and we won't care that much about it
Okay.
because it'll be other things we're going to pay a lot more attention to. I think just inflation is going to be less of a story in 2025 because you're just kind of at that last mile, right? The only story that I would say would be a real story would be it going the wrong way, right? And
Okay.
going upward. So I just don't think people care as much about it. You know, going from 9 to 3 is a pretty big deal. Going from 3 to 2.5 isn't that much. And I just don't think I think there'll be other things to worry about. Let's put it that way.
Okay. Lisa?
I think we will be right around there. but that needs some things to happen or not happen, and that is like the proposed tax tariffs of the new administration that we already heard about. If that does not come as severe, then I think there's a chance that we end lower and that we do not care as much by year end. If that comes, then it's probably goes into the wrong direction again, and then we will probably care a lot.
Yeah. See, I'm more on the upside camp. I think we end the year above 2.5. And I think part of it is tariffs. I think we could get some tariffs. Maybe we don't get the full 25% on Mexico and Canada, but I do think Trump does put tariffs in place at some point. And I don't think companies are going to want to eat those costs. I think they're just going to pass it right on to the consumer. I would also suggest that CPI may be a little bit stickier because housing prices continue to go higher, which means people continue to feel that they can get a higher price for rent because it's homeowners equivalent rent. It's a survey, and people are just going to assume that they can get more in rent for their house because their house price is higher. So I just think that stays sticky.
There's enough in there that would just say that you're going to stay above 2.5. I buy that argument. I wonder though, like if tariffs really truly have an impact on the economy and spending, I just wonder, you can't automatically say, or maybe you can automatically say, it might not be right, is that will create inflation, because what it could do is create a consumer pullback, right? Is that things are, they're passing that cost on to me. Well, I'm just not buying it.
Yeah.
And then it goes down, and then inflation goes down because we're not spending. Again, under the not care thesis, that's possible too. But I think the more linear one is what you're referring to.
The other one that I was thinking about in my head too is, okay, maybe the companies do eat the cost, but they're going to have to offset that cost somewhere, which means probably layoffs.
Bye-bye jobs. Yeah.
Yeah.
So it's the first lever they'll pull, man, when they can.
Yeah. Quickest one.
Unfortunately. Yeah.
All right. Next question. Will the Fed only cut 2 times next year, or will they cut more or less?
I'll go. I think more. And I honestly think it's based upon the dot plot not being very reliable.
Yeah.
If you were to give me the field, right? They said 2, so they're going to do 2, or they're going to do something other than 2. I would put nearly all my money on something other than 2.
Yeah.
My most likely scenario would be more than 2 rather than less.
I give it a shot and say 3.
Okay.
Lisa's throwing darts.
I'm throwing darts.
Jeremy's being the chicken. Lisa's throwing darts.
Jeremy does not like to give
forecasts. Let's throw it into the dark.
Exactly.
And that probably will bite me in July when Diana
Lisa's
wants
throwing
to
darts.
do the
I throw
review.
blankets. Like, how wide can I get this to be?
Right. How general can I formulate this?
Can I cover the earth?
Yeah, right. I mean, again, there's a lot of uncertainties when it comes to inflation that we do not know, or what can spike inflation again. So it's really a guessing at this point in time. Yeah.
I think they do 3 or 4. And I think the stipulation for 3 is consumers remain healthy throughout the year. And I think they want to get more towards their neutral rate, but I don't think they'll be done cutting. I think they could do some more in 2026. My stipulation for 4 cuts is, and I've said this before on the podcast, I think in the Q2 earnings for financials, we're going to start to hear more concerns from the banks about consumer trends. I think consumers may slow down spending, especially if maybe tariffs do come into play, like you had mentioned. And the Fed realizes that and says we need to move this rate a little bit lower. And yeah, you could argue 25 basis points doesn't really matter all that much, but in the Fed's mind, it's a cut to them, right? It could have a major impact. So I think if the consumer does slow down, and we hear that from the banks in Q2 earnings reports, I think the Fed ends up doing 4 this year.
Gotcha. So we probably don't want more than 4, right? Would that be fair to say? Because chances are if it's more than 4, it's because something's going wrong.
Yeah. Right.
So 3 or 2 for sure. We'll be absolutely fine in 2, right?
I could argue against that point. So I think if you look at real interest rates, if the Fed is this tight, right? So your interest rates are still at above 4%. Inflation, let's say inflation sticks around at 2.5. That's a pretty tight Fed.
Yep.
So maybe they do want to do, if they ended up doing more than 4, they would say, we're starting to see more slowing in the economy than we expected. We're not in a recession yet. Consumers are still generally healthy, but let's restrict the economy less by getting us closer to a neutral rate with inflation.
Have we ever done that?
No.
Yeah. Usually we go up the escalator and down
the. But that would be, there's 2 sides to that coin. Yes, it's really bad, or maybe the Fed is just trying to do this soft landing thing and
Goldilocks Ellegard over there. That would be the Goldilocks.
I don't think that's going to happen. But, will we get tariffs or big changes to taxes?
Tariffs, yes. We're going to get some level of tariffs. I don't know. I don't think the magnitude will be as bad as maybe we talked about last summer and fall as we were going into the election cycle. I don't think we're going to get as many or as aggressive. I could be wrong. We'll see. But I think we do get some level of tariffs. On the taxes, I think the only thing that you'll see, I think the individual, the same, we say the same. Yep. The corporate probably gets a little bit of relief somewhere in some way, shape, or form. So minor changes to corporate tax rates. I don't think it's going to be major. I think it's going to be more minor.
Not going to be 2017.
No. And then from the person or from the individual tax side, I think we just extend what we already have.
Yeah.
Yep.
When it comes to tariffs, I think I agree with Jeremy that we will see some form of tariffs, but probably not as severe as Trump already mentioned in the past, like the really like severe in Mexico and Canada and 65 on China and all those big numbers he threw around. I think, however you want to see it, I think he used it more as a negotiation tactic or threat tactic.
Mm-hmm.
And I mean, he's known for that, and international country leaders already reacting to that.
Mm-hmm.
And that could mean that he gets its way without introducing that high end that he proposed. So I think, yes, in some form we will see some tariffs, but not as severe.
Yeah. Do you think, so side tangent here, do you think, I don't know how much how much of exports we get or imports from Denmark we get, but could we,
next to nothing, I would guess.
Would Trump put 100% tariff on Denmark to try to buy Greenland?
So
I think that would be just like headlines and news, right? That would be just polarizing, but not, it would not make a change. It's like,
here's what I would say. I'm never going to pretend that I know what he's going to do. I really don't. And I'm not even going to try. What I am going to try to do is say, again, I think we're going to see, the bluster will be high. There's no question about it, right? It's how he operates, and whether it's negotiating tactics, whether they're planned an attack, or whether he just thinks about it that morning, there is a high level of degree of volatility in the commentary. The action components are his last term. The action components were softer than probably the bluster would suggest. Yeah. That's the kind of playbook, quote unquote, that I'm going off of. But truly, I have no idea.
Or keep the 25% tariffs on Mexico to change it to the Gulf of America.
Yeah. we got headlines already. I'll tell you that much. We're gonna have headlines.
So I think we do get tariffs as well. And then, like you said, not much change on the tax side. Very little.
So. Yeah.
Corporate taxes maybe, but that's only if you produce everything inside of the America.
Yeah. I would say if they're going to do something, they're going to have to do it pretty quick, right? Because there's headwinds that come up down the road for them. So if they're going to implement something, we should know actually probably fairly soon what they're going to try to do, because there's a compressed time frame for them to get a lot of things done. And if they want to do it quickly, and if they want to do it aggressively, they probably got to get it out right away. Yeah. So we'll probably know more in the next couple of months, pretty quick, what the agenda is going to look like. Now, again, the agenda can look like that, and then the commentary can just do this. So we'll have to figure that out. But I think we'll know a little bit more about what their target is pretty quickly.
Yeah. All right. Equities. Do we get 15% corporate earnings growth in 2025?
No. No, I just don't. I'm of the camp of slowing GDP. I don't, I'm not in the camp of recession, but I'm not in the camp of accelerating GDP. Despite whatever the political ramifications of things and that, and, the inflation impacts are, GDP grew above average for the better part of the last, since 2021, right? We've been on a trajectory of higher than average. I don't know how we sustain that while we're talking about fiscal responsibility and all that other fun stuff. We'll see if that actually even ends up happening. But under that scenario, if GDP is slowing, it's just hard for me to believe that 15% earnings growth, unless we have a massive change in tax cuts, which is a one-time opportunity, that could get us to 15. Outside of that, I just don't see it.
Yeah.
I agree with Jeremy. I think that's a little bit too optimistic. I think we come maybe down a little bit lower, double digits, and even so, then it means we grow compared to this year. So that would be a win.
Are we still at
Certainly.
all-time high profit margins right now too?
Close.
We're pretty close,
We're not
right?
at all-time highs, but
Yeah.
we're close.
So you have to then, in order to grow again, you have to
Mhm.
exceed those
Yeah.
again too. Now, again, we've all said all-time highs can be exceeded all the time.
Yes.
We just probably did it last year. But again, it's a hurdle, right?
Yeah.
Is that we're
Mhm.
already, we're not coming off a low margin
Yeah.
bogey here
No.
that we can rebound off
Or
of. We're
or,
high
or
already.
low multiple.
Or low multiple at
And
all.
that's my next question. So I'll answer. I agree with you guys. I don't think we get the 15%. I think we're probably more in the camp of 8-9%.
I think we grow.
Optimistically, you could get 10-11.
Yeah.
But
Yeah.
I just I don't see the 15.
And I think 15 is actually, I think 15 will be eradicated by the end of January to early February.
It already
when
comes
they,
down.
yeah, when
they
the
start,
outlooks start
Yeah.
coming, bringing them
Yeah.
down, I think those numbers get brought down, and I think
Well,
we'll get them early.
Companies
Sorry.
are going to want to bring down their numbers too for
Mhm.
the year. They're not going to
Set the bar low enough so you trip over it, man.
A company is not going to come out and say, "Yeah, we're going to grow our earnings by 15% this year."
Yeah.
Like that's not going to happen. So
Yeah, the AI companies might, but everybody else ain't.
no, everybody's going to walk those back. So Jeremy knows this is coming. Unfortunately, because he like we said earlier, he does not like to make forecasts, but I tried to back him into it with the corporate earnings growth. And then my next question is, do we see price to earnings multiples come down, stay where they are, or go higher?
Yeah, see, I'm going to say it again. I'm just going to rehash. As Tyler is backing me into a prediction. He knows I think predictions are relatively useless. But as a result of being a good podcast guest, I am going to say that I think they go lower. And the real reason for that, again, I have no determination. I mean, valuation's a coin flip. But I do think it goes lower just simply because, again, if I'm having slowing GDP and also just plain reversion to the mean, we're higher than we are from a long-term average perspective. I would have a hard time believing we go higher from here, but it's entirely possible. But reversion to the mean would suggest to me that we go lower.
Yeah. Lisa?
I'm a believer of we can drag this on for a little bit and we can hang in there for a little bit longer. Probably maybe in the back half of 2025 as we progress, but probably for now, I can see that at those level for longer. I mean, if the AI companies and everything like Mag 7 continue to do great, and yeah,
I would agree. I think they stay relatively flat-ish.
Cool.
And I think part of that is just the big companies, AI companies, Microsoft, Apple, Meta, Google, Alphabet, Nvidia. I think they have such a high multiple and they make up so much of the market now that I think they'll just continue to keep that multiple higher than we would expect, despite the rest of the 493 companies trading at like a 17 times.
Yep.
I mean, they have to. I mean, they make up like a third of the S&P now compared to a fourth just back a year before in 2023. So
two quick things. One, I hope you're both right. I hope you're right and I hope I'm wrong. Two, I say on this podcast now, we can officially always just call it Google. We don't have to call it Alphabet. Nobody wants to call it Alphabet because then we end up inevitably saying Google anyway. Let's just call it Google.
That's true. Everybody knows who we're talking about when we say Google.
Exactly.
All right. So, well, let me just, since Jeremy doesn't like to do forecasts, let's just deduce what he told us. So he doesn't think we're going to get the 15. He thinks we're going to be closer to the 8-9.
Yep.
And he thinks PE multiples are going to come down.
Yep.
So what does that mean for total return on the market? I would suggest Jeremy's guess would be anywhere between 4 to 6% total return on the year.
Yeah, you're throwing way too narrow a dart.
Sorry, 0 to 10.
It was like that. Yeah, it was like that. It was like in Star Wars where he's hitting that one little spot to kill the Death Star. I'm not shooting that close. 4 to 6 is what you're really giving me a wide berth there.
0 to 15%.
Yeah, exactly. Anywhere between minus 20 and plus 20. I think we'll be in that range.
All right.
No, if you were to, you want to pin me down, I would say, yeah, if I'm right about these two things, then we're talking about a flattish market.
Yeah.
Flattish to slight growth.
I had to take that opportunity now. Okay. All right. Will AI be the driver again in 2025, or will it be something else, or will the market just broaden out?
You guys hit on it already. AI kind of has to be the driver.
Yeah.
Right. I just don't see, Lisa, you had a chart before that showed kind of Q4 25 earnings get to more normalized between the growth being normalized between the Mag 7 and everybody else. I have a hard time believing that. It's going to take a pretty big effort to get there. I just think AI needs to run it. It's so big right now, and it's really still, especially for the first half, going to be the lion's share of our earnings growth going forward. So it kind of has to drive the market.
I generally agree, yes, but I think the story will change a little bit as we move through 25, because now everything is like on infrastructure, like getting just the power, the infrastructure, getting your chips out, just investing. But I think, and that's probably not immediately, but maybe in the back half of 2025 or as we move, that there will be more story of introducing AI agents, like a broader implementation, more focus on productivity and actually integrating it in our daily lives or broader than it is now, which means more companies would enter the stage and would benefit from it, which would also benefit the market broadening out. So I think generally AI will drive the bus, has to, as we heard, but I think the story will broaden out and will expand a little bit just beyond infrastructure.
There'll be more companies that we think of that are AI companies,
Yes,
right?
correct. Yeah, because the implementation and the focus will shift to more to productivity, to really implement it. And maybe also in companies that we do not think of now, where AI will play a huge role. I think we talked that in earlier episodes as well. And I think that will be more a story of 2025 than it was in 24, where everything was just, okay, get the power out and infrastructure and chips and everything. And I think that will shift slowly as we move through the year.
So I think AI will be the driver. I think AI companies, especially like the Metas, Googles, Amazons, will get one more year. 2026 will be the year of reckoning of return on investment. I think market just says spend whatever the heck you want on this thing and see what you can do, because we just saw Anthropic. They raised $2 billion, I think, with a $60 billion valuation this week. So I think there's still money that just wants to flow into this space. So I think AI will be the driver for this year, but I think it broadens out, similar to what Lisa said. I think it'll broaden out more, not as maybe as wide as Lisa is thinking, but I would say it probably broadens out to the software names, and that's really about it.
Gotcha.
These guys are just gonna have to pull the market again for this year.
All right, I'm gonna give you guys a version 2 prediction that you two have to come up with. Are we gonna see a new company, somebody we didn't know before, become a 50 billion plus valuation for AI?
Well, does it have to be a company that's under 50 billion or is publicly traded already?
It has to be outside of the Mag 7 and everybody think about right now. Yep. So I'll give you a little berth there.
So here's my thought. Towards the end of the year, OpenAI converts in from their nonprofit to a for-profit company.
Okay.
And then towards the end of the year, as they continue to need more cash, they do an IPO.
Okay.
And it does, again, an IPO doesn't mean that they have to sell the entire company. It can be a small sliver. We saw that with Saudi Aramco. So I think they do a small IPO.
Yep.
And I think it puts them at, I think it'll be the largest IPO ever.
Okay. Gotcha.
I think no company that we haven't had on the radar before.
Okay.
And I think what I said with it broadens out into more sectors, AI. And I think that will happen more as we progress through the year, but probably not as much that we see such a huge newcomer in another sector other than what we saw with tech now, where AI is prevalent.
Gotcha.
So I don't think that we see something completely out of the blue that we didn't see coming.
Okay. Fair.
What do you think?
It's hard because IPOs don't matter what they used to, right? In the internet age, that's how you made your money. Now, private equity and venture capital are just awash in
Yeah.
capital, right? So you can just sit in private and you make something cool. You can have $100 billion valuation without ever touching the public markets, which is pretty cool for them, right? Because one person gives you the money, all of a sudden that's your valuation,
Yeah.
as opposed to being judged by the markets of fluctuation every day. So it's kind of a pain in the butt to actually go public now because you got to do public statements and all the other fun stuff that goes along with that. So I think there will be, here's my prediction is there will be a company that comes to the forefront of names. I'm not sure if it goes public or not. I think there will, OpenAI is probably the leader in the non-public space right now, right? I think there's another one coming up and I don't know who it is. I just think somebody's going to build something cool, especially consumer facing cool that will be the next
But
really
if
big
it's
company.
OpenAI, it's not off the radar.
No, that's what I'm saying.
Right, yeah.
I think OpenAI is your leader in the
Yeah.
space right now. I think somebody else will come out with a consumer
we didn't
facing
think
thing
of
that's
now.
AI
Mhm.
oriented that changes behavior. That's what I've said before is that
Mhm.
that's what I'm
Mhm.
looking for. Somebody to change behavior because that person's going to be $100 billion valuation.
Mhm.
Yeah. All right. Do you think small caps or mid caps outperform this year?
Well, I've been wrong constantly on this. So I'm going to say probably not. And I'll be wrong again because they'll probably just shoot straight up from here. No, my side is, if I'm talking about slowing economy and I'm talking about AI being the driver, I just don't know how small caps fit into that space. There's not enough space for them in that regard. So I would say no.
Okay.
I don't think so either, because with valuation wise and the difference to large cap would suggest there might be a reversion to the mean, like Jeremy likes to say.
I hope you're right.
Yeah. But again, like the large caps is where the frenzy is. And also we saw it with the Trump trade that we saw in small caps, or that benefited small caps. Not even that was enough to get it going again. So I have a hard time to understand where it should come.
Yeah, I mean, valuation is probably, the disparity of valuation is so aggressive because that's what, so I say this as a quote unquote prediction. I still own mid and small caps because at the end of the day, I do believe that regression happens at some point, that reversion, happens at some point, and we start to get outperformance from those things that have massively trailed over the past 3 and 5 years. I just don't know when it's going to happen, but I want to be there when it does.
Yeah. I'm kind of in the same boat you are. If I think consumers are going to start to struggle halfway through the year,
it's a hard one.
Hard for me to say that small caps are going to outperform. So, no, I don't think so. Any specific stocks you're going to watch for this year?
Yeah, I mentioned it earlier. Google. I think Google's super interesting because the bear case is around regulation, which should absolutely occur if they get broken up, whatever. I think this administration won't be as aggressive about that, but you never know. And then AI replacing search, which is absolutely possible. I think Google recognizes that that's possible too. But I just think the other things they got going, they make them super compelling around YouTube. This is going on YouTube, and everybody who has a podcast is pivoting towards video podcasting, and it seems to be centralizing around YouTube. Makes it massively valuable. Secondarily, Waymo is the other one that if you're talking, people have talked about Tesla with regard to Tesla and their automated driving. Tesla is nowhere near Waymo. From miles done, from software, from technology, Waymo is the clear leader in that space. And if autonomous driving becomes a thing, even if they're broken up, Waymo could be just as, be half the valuation of Google at this point right now. Yeah.
That's interesting. I like the Waymo conversation because Google doesn't get any credit for it.
No. And it's interesting because I saw it in Arizona. I never saw Tesla. I don't know where they test, but that's pretty
Elon's
obvious.
backyard, maybe.
Yeah. Yeah. But Waymo, it's interesting because they are everywhere. And in the beginning, I think it was last year or even the year before, it was 2023, I think.
Okay.
Late of 2023. And first, we didn't even know what this is because you do not really hear about it, right? Waymo is like, what is this? And why is there no one behind the steering wheel, right?
Yeah.
And it looks a little bit weird with all the cameras and stuff. But
can you with Waymo, can you get in the driver's seat? Like, do they let you?
I don't think they let you get in the
if you're
driver's seat.
taxing.
No,
you sit
yeah.
in the front seat.
Just looking around. You're just screwing with other people. Like,
I'm not driving.
Sorry, keep going. I just
Well,
had to ask that.
Can you? Another weird question. Can you bomb drinks in that thing?
Probably.
I would assume.
Probably because it's not your
But it's,
responsibility.
you know, are the laws written as open container though, right? So if you got an open container, you're not driving, but you still got an open container. I don't know.
That's probably
These are
not.
things.
There's probably no law for that
Yeah, I don't
by
know.
now. I
I'm
think
sure
it's
do
too
they have
early
cameras
to.
in there. I imagine.
Oh,
Oh,
they
yeah.
sure have.
I think
But
so.
so like Uber, if you do something stupid, you as the passenger can get a bad rating.
Yeah.
Like, can you get a bad rating from a Waymo being like, this person was smashed in
Yeah.
this car?
Or I was going 40 and they opened the door.
Yeah.
I don't know.
I don't know.
You have fantastic questions that I do not have the answer to.
I'll have to look at those. Anyways, Lisa, what's your stock to watch?
I think Amazon.
Okay.
I also agree with Jeremy on the large caps. I
Yeah.
think they will drive the markets or a good chunk of the market this year again. And I like Amazon because of the fact it is consumer facing, and also with their AWS, like the cloud-based computing. They're the world leader there, the world leader in consumer. So I think both of that is a good place to be, and I think Amazon is a
Okay. Mine is Broadcom. As much as Jeremy doesn't like that, but
I see the disappointment in
It
his
just
face.
hurts. It just hurts every time.
I mean, they're ASICs.
I just sold it too soon. I think they're a great company. I just sold it too soon.
Yeah.
And it hurts, and it's hurt ever since.
I mean, their ASICs division brings in, I don't even know how many billions at this point, but now they're adding two. That's only from 3 customers. Now they're adding 2, which doesn't even, those 2 customers' potential revenue and potential addressable market isn't even included in the guidance, what they gave in last quarter. So I think, and they're a little bit more diversified now. They do have some software, higher margins. I think it's 80% margin on that part of the business or something right now too. So, and they cash flow like crazy.
Yeah.
So
Good company.
I'm going
Well-run
Broadcom.
company. No question.
All right, really quick here.
Nice of us to all get $1 trillion market caps as
Yeah.
the stocks we're watching, by the way.
I thought about a different one, Eaton.
Oh.
Electrical components.
Yeah.
But
That stock's been phenomenal over the past 18
figured
months.
Broadcom was more fun.
Yeah.
All right, really quick. Fixed income. Will the 10-year treasury end above or below 4%? We're currently at 4.69%.
Gotcha. If I think inflation is going to be under 2.5, I would say the treasury. And I think we're in a slowing economy. I think treasury yield ends below 4. I don't think it's massively below 4, but I think it might be below.
Okay.
I'm for above.
Yeah.
Yeah.
So am I. I think 4.
Mhm.
Yeah. I won't get into I've gone on my tangents before on where the 10-year should be. So we'll leave it at that. Will mortgage rates come down?
Yeah.
Well, yeah, I guess if.
Yeah. I mean, it just fits.
Yeah.
Yes, they will come down. We're not getting 2.5s
No.
anytime soon, but it'll come down from we're at 7 right now, right? Yeah. So it's coming down from there.
And the
I think.
historical spread on the 10-year, the spread between the 10-year treasury rate and the 30-year mortgage rate is about, I think, 1.5%.
Yeah.
So if you're at 4, you could assume 5.5.
Yeah. Which I think that's actually fair.
Yeah.
Yeah, what should I say? Probably not as much as I would like to see on the buying side of things. I think just coming down a tad from where they are now, a
Yeah.
little bit, yes, but probably not much more than 1% at most.
Yeah. I'd honestly be surprised if you see a 5 handle
Okay.
on the 30-year mortgage. All right. 2 more alternatives. Does crypto continue to do well? And does it continue to be the playground for investing?
2 different answers there. No, it doesn't continue to do well. Yes, it ends up being still the playground. No, it doesn't do well in the effect of at some point, I think you're going to have a 30% plus correction. So I guess whatever you would call a crypto bear market.
Yeah.
I think you're going to experience that. Well, I can't throw a dart at when, but we've had 50% plus in the last 4 years. Is that accurate?
Yes.
So you're playing with the most volatile asset on the planet, and that's why I do think it'll still be the playground for investing. Is you got volatility and you've got pure skepticism, or pure speculation.
Yep.
that makes it
Well, and skepticism.
from old people like me. But from that side, I just think that it will continue to be an area where people will use as primary speculation, and I think it'll have a tough time at some point this year where it'll feel nasty.
Yeah.
I think overall the dust will settle a little bit, but it will depend on what we hear on regulation, which is now with incoming administration less and more, I think.
Mhm.
And also what we hear, we heard a lot in lately about countries trying to make it their reserve currency or add it. And I think that has a lot to do with all the frenzy and if we hear more about it. But yeah, overall, I think
I would generally agree.
Mm.
I don't think you're going to get back to back 150% plus years, but I think you could still have it do well.
Okay.
And yeah, it's the playground. It always will be.
I can't think of anything else that would be a better playground for speculation.
Exactly. All right, last one here, real quick. Real assets like gold and silver, do they have another great year?
No. I don't know why. They've accelerated aggressively. There's things that I don't see the catalyst for like secular growth in those things. So I'm going to say that, after this 2 years, you're probably a little frothy and you probably experience a pretty decent correction.
Yeah.
I say overall, yes, probably not as a stellar year for gold as 2024 was, but I think overall with all the uncertainties that's going on internationally, geopolitically, and that's traditionally a hedge against
Very good point.
risk and all of that's going on. So I think yes, overall it will have another decent or good year.
I'm probably more in Jeremy's camp. I think it's probably, if we do have any, we'd have to see another global event happen, whether that's a conflict between a bigger conflict between China and Taiwan or whatever it might be. But I think the global concern, geopolitical risk is already priced into gold. I think people that are worried about it have already run into it. So I don't think we have another great year.
Cool.
All right. Well, that's our outlook after
see us here for take 3.
Yeah. Hopefully we don't have
Hopefully not.
Like and subscribe if you liked what we talked about, and we'll be sure to review these halfway through the year to see how right we are. Or
we should
how
wear the
wrong
same
we are.
clothes next week just to mess with you.
And then we'll review these at the end of the year as well to see what the outlooks were like versus reality. So with that, we will see you all next time.